Okay, let's go ahead and get started so we can try to keep on timeline and allow enough time for some questioning. And
sure.
You know, as I do the introductions here, then hopefully everybody will be caught up and signed in. So everybody, thanks for joining us today. DealKeeper is back. Hopefully you joined the first two presentations that we did, oh gosh, like a month ago, 2 months, but we had a few. There are cloud-based loan origination and servicing software companies. Today they're going to be talking about servicing efficiencies. Ariel and Ryan and Andrew are here, and they're going to talk to you about the best way to bring your loan servicing in-house by using their new servicing module. So with that, I'm going to do some housekeeping, and then I'm going to hand it over to you guys. So everybody on, but just want to make sure that your phone is muted, and I've probably got you muted anyway. The recording is going to be available from this presentation. I am in conference mode over here for our event, so give me a little more time, usually about up to 2 days for me to trim off some of that stuff in the beginning and make sure that we're good to go. It'll be posted in some follow-up emails. And Ariel and Ryan and Andrew are happy to answer your questions at the end of today's presentation. So if you think of something while they're making their presentation, in your toolbar, I suppose is what we call that, just go ahead and type your questions right there. Even if they talk about it during the event, it's a great review. And also they might have something to expand on, or maybe somebody missed them saying it. So that's no problem there to go ahead and answer those questions. And if you're one of these social butterflies, we'd love if you went out and used the hashtag AAPL webinar. So that's about all I've got for your housekeeping. Now we're ready to go. Ariel, Ryan, Andrew, take it away.
All right, thank you very much for that intro. So pictured here is Ryan, who's our VP of sales, and then I'm more in charge of the customer engagement and success. Andrew, not pictured here, unfortunately. He's our head of product and really our servicing guru. So we're going to go through a fairly quick high-level demo of the system. I'll start with a little bit of origination just because it sets the stage very well for the servicing. And then at the end, if there's some questions that are just kind of out of my wheelhouse, Andrew will step in and answer any of those questions. So, you know, this is obviously, I want to thank everybody for taking time out of their day. I know everybody's very busy trying to grow their business and close deals. And we just want to show you our tool because we think that it will help you, kind of make your jobs more efficient and hopefully more enjoyable while bringing your borrowers back to give you more repeat business. So with that, I'm going to just jump in and show you DealKeeper. I'm going to bounce back and forth between what we call the lender portal or the admin console and the borrower portal. And there's a lot more. There are many, many more features that I'm not going to cover. So again, my email address, if you have any questions at all, is just, let me just go back real quick, give you a second, write it down, is Ariel, A-R-I-E-L, @dealkeeper.com. And Ryan at dealkeeper.com also. So any questions, feel free to reach out to us after this demo. So I'm going to spend, like I said, just a few minutes on the origination and just the overall look and feel of DealKeeper, because that'll just parlay into the servicing really nicely. So we have a dashboard that is self-configurable. So anybody can come in and create their own dashboard depending on what their role in the company is. You can do that by hitting customize, you can add widgets, you can drag and drop things around, right? And so on my origination, I have my pipeline and I have my open loans and I can see if they came in from a borrower, or broker, it's an online submission, and I have all of my communications here as well. Now on the servicing, maybe I want to just see, and I just have a really simplified version of this, but I want to see when loans are coming into maturity, right? Because maybe I need to do an extension or a loan modification. And obviously if my payments are delinquent, that's important information for me also. Going into our origination, which is where our deals are set up, and this is where you your jumping off point, right? You have a customer or borrowing LLC in the company, a borrowing LLC in the system. You create a deal for them, and we can just kind of dive into it very, very quickly. I'm not going to spend too much time on origination, but suffice it to say that we got the origination pretty well-rounded. But I want to draw your attention to the loan, and this is kind of how you set it up, right, for the servicing. So you're going to put in your due date, your close date, your maturity date, so when the loan's going to mature, and I can put this out, a year, right? You can escrow if you wanted to, and the escrow can be used for insurance and taxes, right? I think all of you are familiar with that. And then you have a few different options as far as the payment schedule. So you can do a single loan, or sorry, single payment, which is basically, some people call it a no payment or a straight payment. I'm going to focus on the monthly because that has more of the servicing aspects that we're going to cover today. Within monthly, we can do either interest due, P&I, or you can just do a fixed amount if you have some negotiated terms with one of your borrowers. The grace period here is just gonna, on the portfolio screen that we'll see in a second, it just flags it and says, hey, this payment is due, is past due rather, and that would also show up on the homepage widget that I showed you for the payment due date, payment status. So we have an interest rate. We also have a default interest rate. So, and this is a little aggressive here, but we'll just put 20 just for the purposes of this, and let's call it a 10.99% loan, right? So if the loan enters into default, it'll automatically assume this rate as of that effective date. And here's a day count just to calculate some interest. We also have the ability to do construction draws. So you can have no construction draws as is indicated here, or you can do fully funded, or you can do future funded. And I like doing the future funded so I can show the balance to draw against. And if I do future funded, I'm gonna maybe hold back, let's say $80,000, right, for construction. I'm just making up numbers here just to kind of give you an illustration. Also on the fees, we have a few different ways we can assess fees, right? So you can have a doc prep fee for, call it $350, and this is due immediately at closing, and that will be netted out of your funding, and we'll see how that translates into the servicing module. You can also have an origination fee. Some people like to collect the origination fees on the payoff, and so you can do that, and you can defer that as well. You can also have fees that you capitalize, which will just be added to the principal, and therefore you're going to calculate some interest on that. So with that, we can just close out this screen, and then we can see what the net to borrower is, the lender, and we can go ahead and move this to funded status, right? And I forgot one field somewhere. Got one field. And so when we go to the funded status, this is what it looks like. So when we're in my portfolio, right, so that's what we call all of our serviceable loans, you can see that we have a bunch of them and they're all currently funded, right? So first I want to show you how we can generate statements, and I'm going to take you from the simple to the more complex things, right? So a simple payment would be is if I pull up Don, right? So he has a loan payment. I'm going to generate a statement for him, right? Very simple to generate a statement. And we do what we call the periodic statements. And that's basically your monthly invoice, right? So if I generate that statement, it displays it on the screen. This will all be white labeled for you. So we're DealKeeper. So for this demo account, I have that. And you can see what the total payment due is right here. If I publish it, it becomes available to the borrower in the borrower portal. And we'll look at the borrower portal in a minute. Right, so I can publish it, the statement was published, and now I'm ready to go and collect a payment, right? So now he has two loans that are open, and if I want to do the full payment, I can very, very simply just hit full payment, right? So he's behind by 1 month, right? So I could just do the full payment just to catch him up. If I'm actually, let's say it's November 1st, so I'm collecting both of them, I can just hit full for both, and then it would automatically generate it, and now Don is all caught up for his payments. Right? I can choose what payment method it came in. So maybe it's a check. He gave me one check for $1,501, and it's going to be check number 1239. And I could say catch up payment plus current interest due. Right? So I can save a little note, and then I'm done with Don's payment. Right? I have it itemized here. I get a record for each one of those transactions. And now Don is done. So now I want to look at something else, right? So let's go back to the origination. Let's go back to my portfolio. And maybe there is another situation where Tommy is way behind on his payments, right? So if I open up Tommy and I want to do a new transaction, I hit payment, and I can see that he's really, really behind. So in this particular case, maybe I want to put him into defaults, right? So I'm going to go to my defaults, hit modify, and add a default. And so I can make it effective as of the 1st and hit save. And now when I go into this transaction and payment screen, you're going to see that it changed for the most recent one, right? So now this is going, I think it's 20%, and then we can collect all of it. Let's say he gives us a check for all of them, right? And now Tommy is also caught up. I can again say he sent me one check, it's a catch up, right? And I can kind of put this in. But one other thing I want to show you, maybe he gave us the check and my modification date should have been earlier. I can go ahead and delete this and I can reassess it. And I can say, you know, he's going to be defaulted as of July, and then he's going to come out of default in September. So a lot of flexibility here in the default, but you can see it's super simple to use. Oops. There we go, out of default. Right, so in and out of defaults, and I close this. And now when I go to collect all of his payments, you're going to see the various changes here, right? So out of default, in default, and back out of default. And now I can just full, assuming that the check that he gave me is for 8699, and then I can just collect that. Very, very simple. And again, I can put a reference number if there's a payment or a wire maybe, but I'll put the check number in, and then I can put a note, catch up and default payments. Up and default payments. So very easy to use our default and our payment module, right? Also, I can generate statements. Very simple again. Let's say this is coming towards the end of his loan and I want to create a payoff statement just to see what it would look like. I can generate that statement here. Again, it's going to have the payment, what's due in order to pay off the loan, and it's going to have all of the payment history down here as well, which is really nice. So a couple of other things I want to show you here. Obviously, we have our statements here. If I generated statements, they'll show up here. We have the ability to do construction draws, and we also have the ability to do escrow, and I'll kind of go one by one there. So for the construction draws, typically what I like to do is have the borrower initiate the construction draw. So now we're switching over to the borrower screen. Again, the whole concept here, to just kind of take a step back, is we have a behavioral scientist who is a PhD in psychology, and if you were on the previous demos, I probably mentioned this before, but she transitioned into technology, and her job is really to make this as simple to use as possible. So she would sit down with borrowers, she would sit down with lenders, and she actually sat down with some servicing consultants to figure out what is the most important information that you need in order to get your job done. And we put that information front and center. So you can see Mike Jones has 2 active loans, and if I click into one, if I click into one of these loans, it's going to give me a wealth of information. Now, while we also provide the statements to the I might have to log back in here. Now, while we also provide the statements to the borrowers, they don't really need it because there's so much information at their fingertips, right? So let me just dive into here real quick. There we go. And so we can see that we have a draw screen, right? And this shows one of the completed draws already. If I go back to my overview screen, I have a wealth of information here, right? So here I can see that there's no payment due because he's already been paid, and I can look down here at my recent transactions and kind of get a really good bird's eye view of everything that's going on. We also have the ability for them to go and view their full loan terms. So if they open it up, they can see exactly what's going on, and if any loan modifications have been made, those would be evident here as well. Right? Under the statements, this is where any of my published statements would be, and we can publish one and show it here in a second. But what we really want to do here is request another construction draw. So for loan number 10, I'm going to ask for another $10,000, let's say. So $10,000 because I'm building, I don't know, another pool, right? So now we have our construction details. I'm going to submit it. And now this is going to show up. I'm going to go back to the lender portal, right? It shows up in a few different places, right? So number one, on my home page, I can see that a construction draw has been submitted. So really, really easy for you not to miss a single request. If I click into this, it's going to say, hey, Mike's asked for a construction draw. I'm gonna jump right in here, right? So here we can see is there's a $10,000 request, right? It's been requested, and now you can do a few things here, right? So number one is I can request an inspection. So if I have a vendor that I work with, I hit request inspection. I click here because that's the only vendor that I currently work with, the company's funds control. This is just going to be an email out, right? It can have it'll obviously be white labeled for you guys. I don't know why I made ours so big, but it's an email out saying, hey, go do some stuff, contact the borrower, and then hit submit. Very, very simple, right? So that goes out, and then it's going to be what we call the inspection has been requested. Right, so you can see that the progress kind of moves along. Here's the inspector. And so what I'm going to want to do here is I'm going to receive the documents from the inspector, right? So I can load all of my photos. I can load my inspection report. So again, it's very similar to our origination in that you can drag and drop, and then you have an approval process. Oops, didn't mean to do that. Let's go back. Let me cancel here. Got a little ahead of myself. And so this is very similar, like I was saying, to our origination process where, you can upload documents, they go into one status, then you can actually approve those documents. And when you approve the document, you get a nice little progress bar indicating that something was actually done, right? That you've reviewed it and it looks good. And I'm just loading our logos here for now, but it would be a document, it could be a JPEG, it could be a PDF, any type of document here other than, I believe, zip file. Right? So now I go back, I'm going back to this loan, and then I see that this draw now has the inspection completed, right? So if I click back into it, let's say some time passes, the inspection's completed. Now my job is the decision maker, and I'm gonna go in and review those materials and make a decision, right? So I can go in and I can talk to the inspector, I can look at the inspection report, and I'm gonna actually track the progress. So I'm gonna put this in there. So they're building a pool, and the budget was $10,000, and the borrower said they're 100% done, but the inspector said they're 85% done. And so we're going to agree with the inspector and say that it's 85% done. Maybe they're just missing a couple things, not a big deal, but that's going to impact our decision, right? So if we go back to the main tab, we're going to edit and we're going to make a decision, and we're going to say we're going to approve, but we're only going to approve 8,500 because they're only 85% done. Now, if I hit save, you're going to see that the decision has quote unquote been made. And then from here, whoever is going to actually cut the check or has the final say is going to come back into the system. They're going to review this, say, okay, it looks like 8,500 bucks. Maybe we're going to add an inspector fee, right? That inspection fee is $120. We work with the same guy all the time, and it's due immediately, so we're going to net it out of funding. And we're going to go ahead and fund this draw today. Now, immediately after you do that, it's going to be funded. And if we go back to the servicing portfolio, you're going to see that it's been funded. The principal balance went up. The undrawn amount went down. And if we go to our activity, we're going to have another transaction that shows that, right? The $8,700 came out. So that's how we handle draws. It's really, really simple. We do all of the math for you. And all of this posts transactions to your account, and we'll talk about how we can export to QuickBooks in a minute. The last thing that I want to show you, or not the last thing, but one of the final things I want to show you is escrow. So if you have escrow for your taxes, and I think Gordon Gecko is my escrow guy. Hope you all enjoy the names that we have here. You can actually do a new escrow disbursement. So typically what's going to happen is if we take a payment, right? So our monthly payments is going to show if we do full and we can actually look into it, there's going to be 500 that we're paying into the escrow. So that's their monthly contribution into escrow, right? And so once the insurance or the taxes become due, we can actually do an escrow disbursement for, let's say our balance is 3,500. Let's say it's full 3,500. That's the total, and it's going to be for insurance, and we're paying off the insurance. And just hit save, and now we're going to have another transaction here saying that we dispersed the funds to our escrow. We disbursed our escrow funds and made the payments to taxes, or insurance in this case, I should say. Right? So from there, we've gone through a lot of things. There are a few other things that we should talk about. So if we go back to, and again, the whole point of this is servicing can be a very, very complex sort of process. A lot of people use Excel, which is really difficult, riddled with mistakes and human errors because you're typing it in. You know, or maybe you use a servicing program that was actually built for servicers, so it's extremely feature rich, but sometimes it's very difficult for you to find the things that you actually need to do in order to get the job done. So what we really tried to do with this is make servicing as simple as possible while still providing all of the functionality that, you know, about 95% of the users will need. So if we go to Tommy, who got in trouble, right? So Tommy, he was late in his payments, and maybe we want to work out some sort of loan modification for him because we want him to be able to be successful and continue paying, and obviously we don't want to default again. So what we can do is we can go into full terms and we can do a loan modification by simply setting new terms. Here we can do pretty much anything. So we can change the principal amount, we can change the regular rate, the default rate, we can even move it to a P&I, right, if we wanted to do a P&I loan instead. And so instead, what I'm going to do is I'm just going to move this up to 9.99%, and I'm going to change the default rate to 15%, and everything else I'm going to leave the same, but the effective date is going to be today. So if I hit save, now you're going to see I have a new set of terms that are effective as of today. Right? And then for the next payment, we're going to be using the new the new amount. One other thing that I forgot to mention, and there might be some questions here, so I apologize if I didn't answer it, but one of the things I forgot to mention was on the construction draw. So if we just go back here, and I believe it was Miami. So every time you disperse new funds on a construction draw, the principal balance goes up, and as of that date, the interest will be using that new balance for the interest payments on a monthly basis. So you don't have to do any calculations or any fancy math. When the balance goes up, the interest will also fall in line and be used for the calculations. So just moving along, a couple of other things I wanted to show. So if we are going to do a payoff, let's say we're ready to pay this off. Actually, let me go this way. And I think I might have shown you already, but we want to do the payoff demand statement. And so then we can share this with the borrower, right? We can collect a payment for the full amounts, and then we have effectively paid off the loan. So paying it off is very, very easy. One other thing, well, another thing that I find very, very useful here is we really encourage our customers to use ACH. If you're using ACH and the borrowers use ACH, all of the scheduled payments can be automatically drawn from their bank account, posted to your bank account. We will post the transactions, so it's very simple for you to use. And doing it is literally 4 clicks. You click ACH payments, and then it's 1, 2, 3, 4 clicks, and you've recorded and extracted the funds from your borrowers, put them in your bank account for all of the loans that are hooked up with ACH. To take it one step further, just to really simplify the process, if you use QuickBooks Online, we do the same thing. So in QuickBooks Online, you can select all of your payments, hit next. You have a chance to review them. We have this little hover icon. We'll actually show you what accounts and what transactions are being rolled into it. And then you just hit approve and send. So with 1, 2, 3, 4 clicks here, 4 clicks on ACH, you've effectively done your servicing for the month. If you want to generate all of your statements for all of your borrowers, you can do those in bulk too. So if you have 150 loans, you don't want to click one by one, you just click all, you can review the statements. This is the activity as of that date, hit calculate. It's going to generate all of your all of your statements, give you the opportunity to review them if you want. Once you're comfortable with the system, you're probably not going to need to review all of them, but all you do is hit approve and publish. And then as I was saying before, these are then going to be available to the borrower in their statement section, right? So that I just published right there. They can open it up, download it, review it for later, and this is their periodic statement. And I think from the servicing, that's pretty much it, which is, you know, to me, it's pretty fascinating, right? Because we take a very, very complex thing, And we try to give you the tools that allow you to collect payments on time with minimal interaction with the borrowers, because nobody wants to call their borrower and say, hey, you're late, hey, you know, you're missing a payment. So it's all as automated as possible without having the need for you to you know, not have that touch point, because we want you really effectively to be working on your business and not working in your business. And we think that DealKeeper is a tool that helps you get that done. So with that, I think it's a good time to open this up for questions.
All right, let me see if I can pull this back up for you guys. I thought that was a great presentation. I learned a ton more than what I'd even known before. I don't know if that says a lot for me personally, but I think that's fantastic.
Okay, so Craig has one. I don't see anything.
Craig, I'll talk to you guys about too. For some reason, he wasn't able to see the presentation. I've been emailing him back and forth.
And Craig, if you want to, yeah, Craig, if you want to reach out to either Ryan or myself, we're happy to kind of walk you through some of this again. So yeah, not a problem.
Yeah, I think there was some technical issues, and sometimes some of the like the Barracudas of the world block something occasionally.
No problem. No problem.
But let me refresh my screen here. So you guys know in that question box on the bottom right-hand side is where we can access information and get you. All right, let me pull it out here.
So Joanna, so I see one question. Joanna wants to know if we can print a statement. And so, yeah, I think I showed that, but it's pretty simple. So the statements are all PDF anyway. So on the borrower side, we're looking at the borrower screen right here, and you know, it's right here, right? So you can print this out. It's a PDF. On the lender's side, let me just move this out of the way. So on the lender's side, when you're publishing a statement or looking at a statement, so I can just generate a statement here and show it to you. And let me just go back in time a little bit and generate a statement. Then you can just download it right here or straight to print. Right, so that'll just open up your printer if you have it. So yeah, you can definitely print a statement.
Okay, the next will come in from Evan. It says he originates a lot of single-family flips with construction holdbacks, but with interest due on the full open amount from day one, is it possible to set up loan this way in the software?
So let me just say, interest due, yeah. So I think, and correct me if you're wrong, what you're saying is you do the fully funded construction, and that's absolutely part of the program. So basically, instead of, I think what I did was I did future funded. So if we go here, I'm just going to kind of show it to you really quickly. And I have too many things on my screen here, so let me move this out of the way. Right here is where you would do that. So the loan amount is $480, and you can do fully funded, and it'd be $480. You still have the ability to do draws, but it's actually going to be calculating interest on the $480 for the entire time, so for the full loan amount.
Okay, awesome.
Yeah, and then, sorry, thank you. And it'll also create the construction escrow account so you can draw against. It'll have an undrawn balance.
Great. Also, we had a couple of people who are wondering if you can address whether or not it would be a subscription service or a one-stop buy, or if you're able to talk about cost.
Sure, it is a subscription service. It's monthly. We have a one-time setup fee, and then the monthly subscription cost is $238 a month for your first 5 users. And then for if you're using servicing, which I assume all of you are, it's $10 per actively serviced loan once it's paid off. All of the information stays there, but there's no further charges. No hidden fees. That also includes, I can give you a whole wealth of other features that includes, which is the origination, the document generation. So if you have your own loan docs, we can tokenize those for you, very similar to a mail merge, ACH, QuickBooks integration, I mean, DocuSign, thank you. There's also DocuSign and unlimited transactions. Borrowers and brokers can have access to the system, as well as, I want to say 24/7 because it feels like that sometimes, but a very, very high level of support. We are very quick to answer, both nights and weekends. Our official SLA is about an hour, but nights and weekends we're usually tethered to our phones. So. And
I can vouch for that, everybody. Because I am the same way, and no matter what time I'm sending an email trying to follow up, they are on it. Looks like Joanna's back, but my screen just blinks. I'm not sure if you can see that question talking about some sort of updates, I think is what I was starting to read. Let me see if I can reset.
So
there we go. When your WSJP changes, do we need to go in and update it, or will it automatically change?
So Joanne, are you referring to kind of floating variable rates? If that's the case, we do not support that today. We don't tie to LIBOR or anything like that. So you would have to go in and do it manually. That is probably on our future roadmap. We've been talking about that recently, actually.
Okay. Well, that looks like we might be wrapping up here. I think we've got everybody answered that submitted. If anybody has a last-minute question to squeeze in before we say thank you and let everybody go back to their afternoon. Oh, Michael's here. Michael, you are wordy, buddy.
Yeah, okay. So he was taking time typing this one, so let's just look at it real quick. So this is a software solution where we can act as service provider, invoice clients, ACH. I understand that question is, I have a type of license. Might be required that various states, or we're going to act as server. Wouldn't this be a concern? Need to be addressed. Thanks. So we offer the software to support servicing. We don't actually actively service on your behalf. So that is a state-by-state and a business decision for you all. But from my understanding, people are allowed to service their own loans. Depends on who their capital providers are, probably. But there's, as far as I know, there's no rules against servicing your own loans unless you are maybe taking funds from an institution that mandates that you do have a regulatory institutional or registered service provider. Yeah. So we provide the tools that anybody who wants to service their loans can service their own loans. But again, that's going to be a business decision.
Okay.
And by the way, just one other thing talking about, because Michael brought up regulation. We are SOC 2 certified. I just want to mention that because we are cloud-based and everybody always asks about our security. So we have bank-level security. We have SOC 2 certification from a third-party firm that audits us on a regular basis, penetration testing. We're all hosted on Amazon Web, so it's as secure as online can be.
Oh, that's great verification. Okay, guys, it looks like the last of the questions that came in. If anybody else thinks of something after the presentation, feel free. You can email me, and I can send it to the DealKeeper gang there, or you can contact them directly. Either way works great. I'm sure they'll be happy to hear from you just as much as I would be. And we're on time with today's presentation. How do you like that? So great job, guys.
Servicing made simple.
That's right, made it simple. So thank you very much, everybody, for attending today, and Ariel, Ryan, and Andrew, and your whole crew over there for such an awesome presentation. It's always great to be able to work with you. And
we appreciate the opportunity. And thank you to everybody who joined and asked questions. We hope to hear from you soon.
Absolutely. So you guys have a great afternoon. Hopefully we'll see you all in Las Vegas for our conference November 4th through 6th. If you have any questions about that, emails are following up here so shortly. You'll have all the contact information you need. You guys have a great afternoon and enjoy the rest of your week. Thanks so much. Bye-bye.